Hi folks, how are you? Chris here. Going to do a little trade review for today. I had one trade on the SPY this morning. Opened a position at 940. Here we go. Those are my trades. So I sold the 290 put and bought the 288, collected 57 per spread, and got some rebates for opening that position, I guess because it was a liquidity adding position, I guess, at the point that I entered it. So you can see that for 4 contracts, I only paid $1.30 in commissions. I closed half the position at 9:50 10 minutes later, and I closed the rest of it at 10:26. I did in fact put in a break-even stop on my short strike soon after, and that stop never got hit, of course, because basically if the option is out of the money and the option is staying out of the money essentially, then it will experience a lot of decay. So these options get whipped around in premiums, and if as an options seller you can generally take advantage of these types of things. All right, here we go, guys. So let's do my review. I entered at 940. So basically the idea was I was watching the NASDAQ and the financial sector. Financial sector was holding the bid around 2333-ish, which was our weekly highest point that we've been at so far. And now we're below that. We're just like around that point right now as well. But the point is that in that moment, the XLF was holding that bid, okay? The Qs were holding the 215.50 bid, and that's what I was watching there. We initially moved lower on the Qs and then up after that. So all of these things were kind of coming into making the probability of what the odds were that SPY was going to move higher from here or not move lower, basically. So as an option, if you're selling puts, you can profit if the stock doesn't move lower or if it kind of stays sideways, right? Generally, you want it to move up though, so you can take advantage of some of that negative delta. So generally, yeah, we were watching Facebook was much stronger, holding that 190-ish area. Amazon moved down and then caught a huge bid down near the lows of yesterday. And a lot of this, Visa was strong. So basically, I look at all these names, I'll flip through all these names like super fast, and that will kind of give me a bigger picture. At the same time, I'm watching the tape right here in front of me. So I have the financial sector and the Qs, and I'm watching the bids on both of those to kind of gauge the probability of what SPY is going to do, all right? All of that led me to open a position at that moment, and it ended up being a winning position because the probability seemed to be in the favor of the trade. Okay, I took off half the position right here at 9:50, and what made me want to take that position off was the fact that Qs were coming up to this 217 handle and holding that resistance right there at 217, and you can see that we tried it a couple of times, but basically I thought that the move was extended and due for some sort of a pullback. And as you can see here, all green on the 2-minute chart, definitely going to look to start booking a little bit of profits on that move. If you don't, you're just a pig at that point. A greedy pig. I held on to the trade at that point, and what I did was I put in a break-even stop on my short strike. My average price on the short 290 put was over $1. It was like $1.07 or $1.06 or something. And so I put in the break-even stop on that one, and when on this pullback here, it came about 15 cents within that price, but as you can see, it didn't. And that's pretty much what premium decay does, is that if it was like an at the money option, there's considerable gamma risk. But because the option is out of the money below the current trading price, then even if we get some sort of a pullback and a higher low, the chances of that option getting back to the price that it was trading at here are considerably lower, all right? So we would have needed to have a bear break that breaks below this low, and that would have made me stop out of the trade, in fact. But as you can see, the bid held around the 291. Basically, it was 290 3/4, and then we regained 291. And as we regained 291, the buyers started to step in. The financial sector had a very bearish move here, but the Qs were holding well around the 216.50 area. So again, that kept me confident in the trade. Once the Qs kept moving higher here, then I'm just basically sitting on my hands and watching what's happening. So I decided to exit the trade here at 1026. Simply because we're a bit extended on the tech sector, holding that 218 offer, and I wasn't really gonna be waiting around to make much more profit on this trade, you know? I mean, that move was enough for me. This big move on the Qs going up all the way to this 218, it's like a 1.5, and financial sector also catching a bid off of that low. So basically, I noticed a few things, is that especially with the financial sector, the way they had a huge dump in the morning, and then we saw this volume spike. Let me actually bring up the chart for that. Look at XLF on the 2-minute chart here. Look at how we got the huge dump below the 2330 area, and then followed by a huge volume climax down here around 1014. And then I was watching the offers. Now you have to be watching the tape to see this stuff happening in real time. But basically what they did was they were holding the offer at 23.20. They held it and then they lifted it. And then they held it, made it look like it's a held offer and it's going to be bearish, bear flag, whatever. And then they lifted it. And then they held it again and then they lifted it again. So they're playing with people's psyches here, people that are looking to short into a second leg down. And again, now we're just moving higher and higher. As you can see here, nice retrace on the financial sector, and I wouldn't be surprised if we break the highs at this point. Anyhow, it's all about just understanding these probabilities and some of the games that these market makers play. All right, guys, so that's going to be it for today. And a nice green trade there. I'm up about 7% in the account, so it makes up for some of the loss of yesterday's trade. So most of it, actually. So it's pretty good. I'm going to call it for today and go tune a piano. So I wish you a great trading session. Be aware there's the FOMC at 2 p.m. We have tech sector earnings coming up, so no holding any positions into any of that stuff. All right, guys, so I wish you a great day. Take care. Bye. Ciao. Love you. Bye.